Traders have started a new trading week with an attempt to predict future changes in the Fed's key interest rate after an impressive report issued on Friday. According to the U.S. Labor Department report, the unemployment rate dropped to 3.5% from a 3.6%, and this should have caused a jump in the national currency. However, the U.S. dollar started falling rapidly. This could be explained by the number of new jobs. Thus, in the non-farm sector, the number of employed people increased by just 187,000, being well below the forecast. What's more, the previous data was downwardly revised to 285,000 from a 209,000. In other words, in the last 2 months, the labor market added considerably fewer new jobs than it needs to maintain stability. Judging by the population growth and economic activity, the labor market needs around 250,000 new jobs every month. Of course, it's an average reading, as every month the number is different. However, in this particular case, the indicator has been below the average figure for 2 months in a row, so how can the unemployment rate decline under such conditions? This question led to the depreciation of the US dollar, as some traders had doubts about the official figures, and this in turn may cause panic. Thus, the greenback's drop on a Friday could be explained by an escape from the risk of uncertainty. Today, emotions are likely to be tempered, and the market may come down. In this light, the US currency may rebound. What's more, data from Europe will hardly support the euro. Traders have learned about one more decline in the German industrial production. In June, the indicator dropped by 1.5% after a 0.1% decline in May, and the largest contraction was recorded in automotive output. Thus, industrial production slid into the red, reaching a level of -1.7%. The indicator displayed the worst performance in the last 6 months. In the currency market, we still see traders transferring their money from the euro into the US dollar, and the euro inched up against the US dollar, exceeding 1.1000. However, the currency failed to consolidate above this psychological level and dropped below it. Under the existing conditions, the euro settlement below 1.10 may intensify the downward movement. The correction will continue once the price fixes below 1.0900. The alternative scenario suggests a rise in the euro's recovery process. It will become possible if the single currency consolidates above 1.1050. This action could be defined as a sign of a currency's recovery and a possible rise. Meanwhile, the pound sterling also recouped some of its losses against the greenback. Nevertheless, there are no considerable changes on the trading chart, and the bearish sentiment continues to prevail. If the pound sterling settles below 1.2700, the volume of short positions will increase. In the event of this, the downward cycle will continue, and thus allowing the price to hit a new low in the correctional movement. According to the alternative scenario, the British pound will hover between the levels of 1.2700 and 1.2780. In this case, the asset will trade sideways without any clear trend. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.